Hello guys, in today's video we're going to be looking at the point of what interest. So I'm going to be giving you guys the step-by-step procedures on how to take trades at your point of interest. So the point of interest are basically supply and demand area where we use to actually make our entries. So if you like this video, please endeavor to hit the like button, subscribe to this YouTube channel before we continue. So right after the intro, okay, so you're looking at my screen and you can see clearly well that we have the point of interest marked out. All right, so and you can see the strategy. Mainly what I'm focusing on is about the entry. So the point of interest is mainly your entry, and if you like to watch this video, please endeavor to hit the like button and subscribe to this YouTube channel before we begin. So without wasting much of your time, let's get straight into it. Okay, so today we are talking about point of what interest. Okay, so our topic for today is what point of what interest. Point of interest. So what the point of interest stands for, the POI stands for, is a point of interest. Simply I can define that by saying it's an area in a market where you are interested in, where you want to actually take your buys or sell. So if it's an uptrend, it's an area where you want to actually take your sells. And then if it's a downtrend, okay, if it's a downtrend, and then it's an area where you want to be buying from, you're looking to buy from. So in this particular case, this is what our POI. So in this particular case, let me just go ahead and just write it down there, right? This is what our POI. So this is our POI. This level marked out is our POI. So the POI can be an area of what supply zone, okay, or an order block. You understand? It could be a supply zone or another block, or it could be a supply or demand zone or what, an order block. So I'm just going to break down for you guys today. All right, so just watch the video and to the very end. So first and foremost, the key strategy today is that I've been talking about in my previous videos. All right, before today, if you have not watched, please endeavor to go back and watch them, and you have to pay attention, please. Just pay attention. Even if you're a beginner, I'm going to explain in such a way that you'll be able to have a grasp of it. So with a strategy, this is a model, okay? All right. It looks very complicated here, but when we go to the chart, it will be clarified. So just pay clear attention, all right? You don't have to hurry. So with the model, what you're looking for is the market is pushing to the downside, okay? All right. The market makes a retracement. How do I do now? Okay, I think I made a mistake here. I'll rather use a drawing tool. Okay, so the market is actually pushing to the downside, as you can clearly see. The market makes a retracement, so that's a pullback, creating a high, and then coming back to sweep this, take out this low. Okay, the market is moving to the downside, creates a high, a higher low, and then comes back to take out this low. Okay, so once the market comes to take out that low, that is what that is called what, a liquidity sweep. Okay, it's called a liquidity sweep if only the market returns back immediately, okay, and take out this high. So a liquidity sweep is started to happen whereby the market is pushing to the downside, pull back, creates a higher low, and then take out this low here immediately, and then pushes to the downside. But it did not stay down. It did not continue to go down, and then pushes back to the upside, and then takes out that previous higher low. Okay, so therefore a liquidity sweep has happened. I hope you understand what I mean by a liquidity sweep. Well, I understand because I assume you understand because I explain it in the best way possible, right? So after your liquidity sweep, this here is the liquidity sweep because the market takes out the low, all right, that creates this high. So now what you wait for is a break of structure. When that happens, this area here becomes what? Your POI. That area is your POI. You look for demand zones, okay? You look for supply and demand. Supply zones if it's in an uptrend, demand zones if it's in a downtrend, okay? You mark them out, okay? So now the market comes, takes out this high, all right? The next thing you wait for is a pullback. That pullback should be at least 50%. This pullback, this move here is the pullback. All right, that pullback should be at least 50%. The reason for that pullback is what? To provide what? Liquidity. All right, the pullback should be at least 50% of your fib. So like in this particular illustration, you can see that the pullback is what? At the 50% level of our Fibonacci. See this area here? That's your 50%. So the pullback should be at least between the 50%, 60% or above. So if it's any of that, then that means it is what the pullback is what actually what valid. All right. So after the pullback, you mark that area. You mark that area to be what this area here becomes our structural what liquidity. It becomes what our structural liquidity. All right. So in that's an area where you want to be what participating. You want to be you want the market to come back, grab the liquidity below that area. Okay. After the pullback, all right. After this pullback, all right. What you should expect the market to do next is to take out this high. All right. So you want the market to what? Sorry guys, I don't know what that is. Okay. Let me just cancel. So you want the market to actually what? Take out this high here. So once that happens, you want the market to take out this high. All right. So once the 50% retracement is complete, you want the market to sweep the liquidity above this area, the break of structure. So if the market takes out the liquidity above that area, it's called what? Break of what? Structure. All right. So I'm just explaining it so that you can clearly understand, and I want you guys to pay attention. So once that happens, the break of structure, what happens is what? You want the market to what? Come back, sweep the liquidity below this area, and then keep pushing to the upside. So once this liquidity is swept, you expect the market to what? To go to your POI. So at your POI is the area where you want to be what? Buying this market. So at the POI, I mean this area here, all right? This area here is the area where you want to be buying, all right? So this is the area where you want to be buying, all right? At your supply or demand zone. So you can go to the 5 minutes time frame, the 15 minutes time frame, and get your what? Entries, and then you put. You can stack as much as you want, all right? You can stack your positions as much as you want, all right? You can put your positions as much as you want. All right. So you can put a lot of positions there, and then your stop loss just below that candle because you are using confirmation candles. All right. If you are not using the candles, the confirmation candles, I will say your stop loss should be at the what? The structural, the protected what? Low. This area here is your protected low, and this area above here is your protected high. So this area here is what? Your protected low. Take note of those. This area is your protected high. So the protected high should be what? Your target. All right. If you don't want to use confirmation entries like the candlestick confirmation, your stop loss should be here. But note that if you're not using the confirmation candles, your risk to reward ratio is going to be less. All right. So, but if you use confirmation candles like the pin bar, the confirmation candles around this area, like the pin bar, the inverted hammer, the engulfing candlestick patterns, your risk to reward ratio is going to be higher. So assuming you have an inverted hammer, a pin bar or an inverted hammer around that area, and you put your stop loss there. So imagine the risk to reward ratio, the returns you're going to be getting, because you're going to be risking more. You understand? The small you're risking, you're going to increase the lot size. For instance, now let's say you're risking a $40. You understand? You're risking a $40 on this particular trade. Therefore, you can use like a. Let me zoom in a little bit. You know that this is 15 pips. Okay, so if you are risking a $40, you have a $40 account. So therefore, you can actually go like 30 lots on this, and then your $40 will not still blow, and then you'll be making about 132 times 3. That should be about 300 and something or $400. So imagine what you'll be getting from a $40 risk. And then there are some setups that can even give you more. All right. So now let's look at the sell scenario. The sell scenario is still the same thing. Okay. It's still the same thing. So I'm just going to take my time to actually explain that for you guys. All right. So I'm just going to take my time to explain that for you guys. And please, if you have not subscribed to this YouTube channel, endeavor to hit the like button and subscribe. Okay. Hit the like button and subscribe. So now in a scenario where the market is in an uptrend and you are looking for a sell model, all right? So you still look for the same thing. You want the market is pushing to the upside, then it creates a higher low, and then creates what? A liquidity sweep, takes out that high. All right. So it takes the liquidity sweep is sent to happen whereby the market takes out the high, it doesn't continue to go to the upside, and then we have what? A break of structure. We have a break of the structure. So after the break of structure, what do you want? You want the pullback to happen, and that pullback should be what? At least 50%. So after the pullback happens, which is our structural liquidity, you want the market to actually create another break of structure, which is this break of this structure, this level here, which is our second break of structure. So we have 1 and then 2, at least 2 break of structure. So when that happens, therefore your setup is what? A valid setup. So the next thing you'll be looking for is the market to come and sweep the liquidity resting above this area, and then the market taps into your PY, and then you look for your confirmation, and then you sell. So without wasting much of the time, let's go to the charts and then look at some of these examples, guys. Without wasting your time, I just hope you paid attention and then you understand. By the way, I provide mentorship, and also I have a PDF of these outline. Okay, if you don't want to pay for the mentorship, you can just have the PDF where everything is well explained. All right, and that goes for $20. All right. So now let's look at the VIX 250. 1 second. I think I have 2 setups there, 2 examples, or probably 3. Yeah, three guys, or probably 3. So now we'll look at this. We'll look at this together. Okay, we'll look at this together. Let me just change the color to purple. All right. So I want you guys to pay attention. Don't pay attention to what is popping up on my screen, please. All right. I just want you guys to take a minute, okay, and meditate on this. So look at it, guys. Look at it, and then tell me. Look closely and pay attention, please. Tell me, are you able to spot a setup here? All right. I want you to pause the video and do that. All right. So I don't want to waste time. I don't want the video to be too long. So we're just going to do this together. But I assume you've paused the video to do the exercise. So right here, we have a sweep of liquidity. All right. That is checklist 1. And here we have a break of structure to the downside. Checklist 2. Now, the second thing is, do we have a pullback? Yes, we do. This move here, the whole of this move here, is our pullback, which is up to 50%, because if we pick our Fibonacci from the swing high to the swing low, you see that it's more than 50%, which is the setup is valid. All right. So if I was making my analysis, you see that the setup is valid. So I pick my tool, that's my structural liquidity. All right. So the next thing is, do we have a second break of structure? See, so we have our second break of structure, right? So the second break of structure happened, All right, we have our protected high. Okay, that is our protected what high. All right, so that's our protected what high. So that's our protected high. Okay, so now this is what our structural what liquidity. You want the market to sweep the liquidity above that area. Okay, I remember taking this trade live. I think I will just upload a clip per every asset. Okay, but the thing is, with the volatility index, guys, I just didn't get on it on time. I just kind of like missed my entry. It was supposed to be on the 5 minutes. Okay, it was supposed to be on the 5 minutes. So let me show you guys something. All right, so the charts are actually loading. My entry was supposed to be somewhere around here, but since I got on it late, here's where my entry is. I still maintain the same stop loss. All right, because the engulfing candle here, the engulfing candle which we have here is supposed to be my entry. Okay, that should be my entry trigger, but I actually missed it. So right now I'm just in though. I'm just sitting and waiting. Okay, so, guys, as you guys can see, it's done already. So the market went a bit up. Okay, so if you have entered here, it would have been actually safer for us. So when I entered here, it was majorly some few positions. Okay, so I did added some positions right here. Okay, right, I did added some positions right there. All right, so I maintain my SL because when I entered here, I wasn't too confident. Okay, I wasn't too confident. All right, I wasn't too confident, so I entered no positions here, so I had to stack a lot of positions right here. So right now the market has actually smashed our TP. Well, I will go, why not letting some positions run to that extent. All right, because I've been in massive profit, because already this trip here at this particular point to show you the before and after. All right, so that was our structural liquidity. We have our protected high, and this is our protected low. Okay, so the protected low should always be your first target. Here should always be your first target before any other thing. So, and then here is your POI. All right, we're just going to go to the 5 minutes and clarify 15 minutes and then clarify that out. All right, so now looking at the 15 minutes, okay, you can see your POI. Okay, you see this candle here. So you see this candle here, this is your POI, this area. So what happened here, the market actually traded, and then we'll go to the 5 minutes where I'll show you guys my 5 minutes entry. Okay, so my 5 minutes entry. So if I took the trade, it should be the confirmation. Okay, mainly the confirmation. So this is your POI. All right, so now the market actually came here because there's a supply zone here. All right, on the 5 minute, there's a supply zone there. So you have to learn to mark those out. All right, so the market came, tapped into that 5 minutes POI, and then here's your entry. So why is that your entry? Because we have an engulfing candle. We have an engulfing candle here. All right, I teach these, but I'm giving it to you guys for free. Please just hit the like button, guys, because this is actually going to change your life. I'm telling you guys, people actually pay for this course, but I'm giving it to you for free. So you can share this video to as many persons as possible. Okay, so you see, you put your entry there, your SL there, and then your first target here. See, your clean 1:5. All right, your clean 1:5, guys. Your clean 1:5. So then if you decide to hold further, you see how much you'd have made. Then check your risk to reward. Check your risk to reward, guys. Check your risk to reward. I'm telling you guys, check your risk to reward. Check how much you have been making. Like, you're risking about $7 if you are using a 0.1 lot, or risking $70 if you are risking 0.1 to make 1,400. So are you seeing that? That's actually massive. So with that aside, let's look at another example here. Yeah, I think above here, high up here. So one thing with this strategy is this: it works. You have to learn to put in the work. Okay, You have to learn to put in the work. You must always put in the work. All right, it's not for lazy ass people, because it works. You don't have to be lazy, man. You don't have to be lazy, fam. So first and foremost, I want you to like take a moment, look at this area. Okay, can you spot a setup? Okay, pause. You have to pause the video first and then observe it. Can you spot the setup? Well, if you can, fine. If you can't, fine. Anyway, it's still a win, because we're gonna go this together. We have a sweep of. We have, first of all, you see that the market is actually moving to the downside. Okay, we have the market moving to the downside. All right, so we have a higher low, we have a low, and then we have a sweep of liquidity. All right, so we have a sweep of what liquidity there. So here we have a sweep of what liquidity, and then what happened? The market pushed to the downside. Okay, market pushed to the downside. After the sweep of liquidity, we have what? Our break of what? Structure. Okay, so this did not actually break the structure. Okay, this, okay, yeah, we have a little sweep of, we have, now I don't think so. This did not actually break the structure of this market. You can see here, this did not take out this low. Okay, since it did not take out that low, there was no setup confirmation yet. Okay, so there was no setup or confirmation. All right, not until this move. Okay, this move created the break of structure, then this move created our 50%. Okay, so now do we have a pullback? Yeah. Is it up to 50%? Yes. So from the swing high to the swing low that caused that break, so we have up to more than 50%. All right, but now again, there is actually a contemplation. There's something that I always contemplate about, which I've been able to solve. So this should be our structural liquidity. Yeah, but since this is closer to our POI, all right, which we're going to mark out now. All right, since that is closer to our POI, that becomes, since this is closer to our POI, this becomes our structural liquidity. Just take note of that. Okay, this becomes our structural liquidity because it is closer to the POI. So this becomes our protected high. This becomes our protected this becomes our protected low. The protected low is the highest point the market gets before coming back to take that liquidity. So however far the protected low is before coming back to take out the liquidity is going to be your target. Okay, just learn to implement that. So we're going to go back to the 1 hour time frame. Okay, the goal of going back to the 1 hour time frame is to look for confirmation. All right, so your confirmation can happen in any time frame. Okay, it can happen on the 5 minutes, can happen on the 1 hour, whichever one it does happen. Okay, you go with that. All right, so on the 1 hour time frame, you can clearly see your candlestick confirmation. All right, your stop loss just slightly above that area, and then what happens? You have your take profit. Bam. All right, so you see your risk to reward ratio is 25:1. So you see how massive the profit would have been, guys. 25:1, 25:1. That's really massive, fam. So please endeavor to hit the like button, subscribe to this YouTube channel for more and more wonderful contents like this. Let's look for another example. Probably VIX 25. Nah, I think VIX 151 seconds. I saw a setup there today. Yep. So let's look at that together. Okay. So I saw a setup here on the VIX 151 seconds. All right. So pardon me, guys. I'm not actually feeling well. My nose is kind of blocked, but I'm on medication right now. So here on the VIX 151 seconds, we're just going to look at a few things. Okay. So I want you guys to always train your eyes. We have a high, we have a low, we have a high. Okay. But we have a high, then we have a low. Okay. So now the thing is this, where I want to actually explain something for you guys to actually pay attention to is this. Okay. We have an internal high and then low. Okay. And then the market created a high and then comes back, sweep the liquidity, sweep this low. Okay. Sweep that low. So it's a valid setup. All right. So we have a sweep of liquidity. All right, because this market created a low, then created a high, and then created another high, which is the lower. You see this low, this one is higher than this, so this is valid. Okay, all right, so now we have our protected low. We just mark, okay, our protected low. Do we have a pullback? After the sweep of liquidity, we have a break of structure. Okay, we have a break of structure. Right, so the setups is not always going to be the perfect, like the drawing. Okay, so you just have to learn to what, interpret it, to spot it. And then, do you have a break of structure? Yes. Do you have a pullback after the break of structure? This is not up to 50%, so your pullback level should be always be where the 50% is. So from the swing low here to the swing high, which is the highest point, which is this highest point the market got to, right? So to here, so it's a 50%, because you can clearly see your 50% FIP level at that point. So I'm just going to go ahead and delete all of this. Okay, so we have a pullback being up to 50%. That becomes what, our structural liquidity. Okay, this becomes our structural liquidity. And do we have a second break of structure? Yes. All right, so now we're just going to go ahead and mark our POI. Our POI should be here. Okay, this should be our POI, right? So, but one thing is, where the structural liquidity is, which is here, all right, we have a valid demand zone. Okay, can you see it? That's a valid demand zone. So on the demand zone, what are you going to be doing? All right, so like in this particular case, we have, you don't look for buys at once. All right, so in some scenarios, I don't actually look for buys or candlestick confirmation at once. So the market taps into your, after the sweep of liquidity, it taps there to here. So we can go to other time frames and then check. All right, we can go to other time frame and check it. Okay, so you could have entered here, okay, and then still be holding. Okay, but you could have still entered here and still be holding. But I'm going to show you a method that actually maximizes your profit. Okay, so you would have still be holding that trade and it could still be running. All right, so your target should still be there, because that's the highest point the market got to. All right, so I'm going to show you a way that you're going to enter this kind of setups, because it took a long while for the market to actually come to this area, and the candlestick confirmation is not too too powerful. Okay, so I'm just going to show you something. All right, so this is our powerful candlestick pattern on the 1 hour. This particular one is powerful, so let me show you the one on 30 minutes. They are powerful candlestick patterns, but I'm going to show you a better way to actually enter it. So, but that is supposed to be for my private group students, okay, for those who are interested. So you see these candlesticks, yeah, that candlestick is a powerful one, could have still entered. So far as this supply zone, the market has not swept through that supply zone, it's still a valid setup, guys. It's still valid, so you're just gonna hold. But then again, let me just show you something. Let me just blow your mind. Okay, I'm just gonna blow your mind on this. Right, so right here, the 5 minutes float, I'm just going to give you guys the secret for free. Okay, so now on the 5 minutes, do we have a sweep of liquidity? Yes. So the market creates, let me just go ahead and delete this or that stuff. Now I'll just leave the other one. Do we have a sweep of liquidity? Yes. Do we have a break of structure? Yes. Do you have a break of structure? Yes, there was a structural break there. If you look closely, you see, let me zoom in a little bit. So you see how the market took out this high, okay? So it's a valid setup. Do we have a pullback? Is it up to 50%? From the swing low to the swing high? It's 50% exactly. All right, so now this becomes what your structural liquidity. All right, so this becomes what your, we have another second break of structure, okay? Because that area took out what. So you just have to understand. All right, so this becomes what your structural liquidity, and then this becomes your protected low. Okay, so now this becomes our PY. This becomes our PY. So I'm just going to go ahead and delete this. Okay, I'm going to change the color of this. Okay, yellow. All right, so now you see how the market came, and then now we have our supply. We have the supply zone here, which, let me delete this. Okay, see how the market was attracted to this supply zone, this demand zone, sorry, not supply. The market is actually attracted to this demand zone, and then this becomes your target. All right, so that's the target. All right, on the smaller time frame here, you can put about 100 lots, guys. 100 lots. The drawdowns are going to be 0. Okay, you see, imagine putting 100 lots on this and then risking, okay, imagine putting 20 lots on this, risking just $100 and then making about $2,000. You can imagine that. So this is absolutely massive, guys. So please endeavor to hit the like button, subscribe to this YouTube channel. See you guys in my next video. Please don't forget to follow us on the Telegram channel, right? Because we are bringing the best top-notch strategy to you guys. So don't forget, this is your engulfing candle, right? So that's your engulfing candle. That's the entry. So see you guys. I love you guys.